What's up, everyone? It's Kadi with MoneyVest. So markets here going up on an 8th consecutive green day, so longest streak in over 2 years for the S&P 500, and the NASDAQ also pushing up about 8 basis points. So again, it wasn't like a super green day, but we still finished higher on the day, with the Dow Jones dropping a little bit over 40 points. What you'll notice is that we are now coming up to a very, very important resistance, as we have talked about in our previous videos. So the momentum is now starting to slow down. It's not the same as last week. Last week was very, very green. Almost every single day was up over 1%. And now we're coming up to a huge supply and a huge wall where the markets are not able to push past, at least not yet. So hope you guys enjoyed this video and find it helpful. Make sure that you drop a like and don't forget to subscribe to the channel. If you're just joining us for the first time, I would really appreciate it. And links to our Discord and Patreon is going to be down below. I did pick up a lot of shares, over 2,000 shares of one ETF. So again, if you want to get access to all those alerts and find out what I'm buying and selling, and members only private videos are going to be included, as well as the trading view charts and our spreadsheets with intrinsic values, links are going to be down below. We do have that 16% annual discount available till the end of this month. So S&P 500 up over 10 basis points, NASDAQ up over 8 basis points, and not a whole lot. We did have majority of stocks declining on the day. Over 3,700 companies were selling off, with over 2,100 stocks pushing higher. So this is what the heat map looks like. So again, a little bit of more momentum towards technology because yields were falling. Yields were once again down a little bit over, I think 1 to 2%, now trading under 4.5%. So they've already dropped 50 basis points from their recent highs. And so technology, real estate, and comm services doing really well, with utilities and energy selling off, especially when you consider oil prices have been pulling back as well. And we are now sitting at under $80 a barrel. In the last 1 week, almost all sectors, 10 out of 11 sectors are green except for energy. Energy is the only one that's selling off. And over the last 1 month, of course, we've got a little bit of a mixed market, with markets still being a little bit more defensive, with utilities and defensives pushing higher along with technology, and other sectors are still lower. But that market dynamic has shifted a little bit over the last 1 week as the market has become more risk on the back of yields falling. So ethanol prices and orange juice for the win once again. Coffee prices, cocoa, and volatility continues to move higher. Silver, sugar prices, palladium, and lean hogs also pulling back, with Bitcoin just over 36,480 and Ethereum just under $2,000 at the moment as well. So S&P 500 gains for an 8th straight day, builds on the longest win streak in 2 years. The market is starting to set up for the Fed moving to the sidelines, and we may get a soft landing, is what Anthony said, from chief market strategist at Price. And equities were really oversold for the last couple of months, and they're finally starting to see a little bit of a rebound. So we talked about how this technical rebound is happening on the back of yields falling, dollar dropping, and crude oil prices also rolling over. And as a result, we have seen a very nice recovery for S&P 500. We also did have volatility, highs of 2023 levels, not to mention percentage of stocks trading below their moving averages was also very, very oversold. However, there's a big however. We are now coming up to this resistance where I think it's going to become more and more challenging for the S&P 500 to break out of. So high for the day, 43.91. So we are once again sitting right over here inside this red rectangle. Previous support, previous resistance, and now also starting to trade sideways with a lot of consolidation. So the momentum's not that strong. The last couple days, you can see the volume has been a little bit lower compared to the previous week, and we are seeing doji candles where there's a lot of indecision in the markets between the bulls and the bears, because everyone understands this. Everyone, market technicians, fundamental investors, everyone understands and knows that 4,400 is the key barrier. Everyone knows this. So unless we break out of over this, there is going to be some pullbacks or some possibility for us to hit a wall and not really go anywhere. So that's why it's been a little bit more boring the last couple of days, right? It's not really, markets haven't really done anything. It's just 0.1%, 0.12%. It's just been just like that. Like, it's just been flat. It's been consolidated because we're coming up to that resistance. Same thing is true for the NASDAQ. You can see that we are, again, coming up to that resistance. High for the day, 13,684. We've talked about 13,700 as the resistance for the NASDAQ. And this, again, of course, is the level of resistance and supply that we're coming up to for the NASDAQ inside this red rectangle as well. So again, getting rejected at this previous level, and this is the lower high for NASDAQ at the moment. So that's where we are. For both of these indexes, it's not like we are out of the woods, we're clear, and there's some confirmation. No, we have made a very nice recovery, a technical rebound on the back of yields rolling over. So if I come over to the 10-year yields, you'll notice that they are starting to break down below 4.5. And one more trend that I wanted to highlight for the 10-year treasuries was the higher lows. So this right here is, or can be considered as, a little bit of a ascending support or a higher low on the daily chart. And you'll notice that we started to break down below that as well. So those are two really important key technical breakdowns on the 10-year treasuries that happened today, when the treasuries were down a little bit over 1.6% and breaking down under 4.5%. So I do expect maybe more potential downside, and as more and more investors and funds globally start to realize that the yields are not going to be at these levels forever, they're going to want to lock in these rates for the 10-year very, very soon. And that's going to create that influx of demand, which is going to lower yields, because as price goes higher, yields move in the opposite direction because of that inverse correlation. So if you do consider to pull back, next support really is going to be at 4.36, down to as low as 4% for the treasuries. And those are some levels that we're really expecting for the treasuries to come down to, because that's going to benefit both TLT and TMF. TLT was higher on the day, hitting a new recent high since September, 1.7%, just a little bit under $90, and TMF obviously pushing up, also up over 5% as well. So those right there are going to be, again, some of the ETFs to watch on a long duration basis as yields continue to struggle here, and of course break down some key technical levels. Again, going back to S&P 4,400, NASDAQ 13,700, those are some levels to watch. Apple here with a very nice breakout, making a higher high and continuing on that potential shift in the direction for Apple. So it's starting to get a little bit more on the overbought side. So that's another thing that I'm kind of concerned about, is that when you do see these technical rebounds that are very violent and very aggressive, the markets do become a bit more on the overbought side. So RSI, MACD here for Apple, not exactly quote unquote overbought, but it's definitely getting up there to a point where the momentum can start to fade a little bit, as it already has begun with the S&P NASDAQ not really doing anything intraday. Same thing with Amazon. You can see that we are starting to become a little bit more on the overbought side with the RSI at 65, the MACD also kind of leveling off with those histograms. So this has been a very massive move to the upside for Amazon as well, from lows of about $119. It's already gone up 20%, and the next target and resistance is going to be about $146 per share. So as strong of a rally as it has been, it's now starting to come up to a halt, because a lot of individual stocks are becoming overbought, and S&P and NASDAQ are also coming up to their respective resistance levels. Now, Tesla, not quite overbought yet, really just consolidating sideways above that support of low 200s. Still very much in the context of this downtrend of lower highs and lower lows. So that's something that we have to pay attention to. And of course, next resistance is going to be 241 to as much as $254 per share for Tesla moving forward. So that's really where we are with this downtrend. RSI, MACD showing signs of some potential upside, with the MACD crossing over that signal line, and RSI also very, very flat at the moment for Tesla. Talking a little bit about NVIDIA here. And NVIDIA also moving higher very nicely, up over 1.3%, so 465 is where it's at. It's a lot of consolidation sideways in that range for NVIDIA. So this right here has been the range within which it's been trading. A lot of resistance sitting right over there at 465 to as much as $500. We've talked about this before, and a lot of support sitting right over there for NVIDIA, sitting roughly in the low 400s for the company as well. Talking about advanced micro devices, so very nice move to the upside at about $113. We've talked about the breakout, but again, you can see the RSI and the MACD starting to become a little bit more on the overbought side for advanced micro devices, and that next resistance and target is going to be at about $119 per share. So this right here is going to be that level to watch for AMD next as a target, and support level is going to stay put roughly around $112. So this is going to be a new support level to watch for advanced micro devices, all the way down to as low as $100 for AMD. So those right there are going to be some levels to watch. A lot of consolidation for AMD, and next resistance, like I said, is going to be $119. Talking about Meta platforms, and Meta here also just consolidating at that resistance, at that level of supply, that area of green, sort of like the red rectangle that we have between 300 and 325, so at $25 range is really where we are with the Meta platforms, and support level is going to stay put roughly around inside this green rectangle. So we're seeing a lot of consolidation for Meta as well. So Tesla's in a downtrend. Amazon, Apple are starting to shift that overall trend to the uptrend. Microsoft's in an uptrend. Meta and Nvidia and AMD, I would argue, are very much in a consolidated pattern where they are moving sideways in a horizontal pattern at the moment as well. Talking about Netflix, and Netflix also making its way higher slowly and steadily. However, the RSI and the MACD is starting to concern me a little bit. So this is indeed something to keep in mind, that the individual stocks that are driving the indexes on an underlying basis are starting to become more and more overbought. So the momentum may not be as strong as what we have seen before, because in the last week they've come from a very, very oversold territory to move back higher with a technical rebound. Now they're getting up to that overbought levels where the momentum is going to start to fade, and when that happens, S&P NASDAQ is going to make it a little bit more difficult. It's going to be challenging for them to see those breakouts above those critical levels, and I wouldn't be surprised if the sellers do end up winning this battle, at least for right now, until we consolidate. And next week we've got inflation numbers. Maybe that's going to spark an interest in that potential breakout from the bulls as well. Again, we'll find out. But Netflix next resistance 452, got a massive gap to fill. Support level is going to stay put at $348 for this company. Talking about Google, and Google here also moving higher very nicely. It's slowly and steadily kind of filling this entire gap that it's left, and the next resistance and target is going to be 139 to 144 dollars per share, and support level is going to be at 126 down to as low as $117 per share for Google as well. So again, lots of consolidation sideways for this company. Talking about Microsoft, and Microsoft also, look at that. I mean, just massive amount of momentum coming in for Microsoft. But again, take a look at the RSI, the MACD. Every time it's gotten up to these overbought levels, we've got to be careful. We've got to understand that this is not going to last forever, and this is something that we have to prepare for from a potential downside standpoint. Resistance is going to be at 366 for Microsoft moving forward. Talking a little bit about PayPal, and PayPal here also just consolidating sideways up over 82 basis points. Resistance is going to stay put roughly around $56, $57. So this right here is going to be that level to watch, with the support at roughly $50, $51 per share for PayPal. So lots of consolidation sideways for PayPal, and that's really something to keep in mind for this company. Visa, on the other hand, also consolidating sideways. So you can see the RSI, MACD, again, not exactly quote-unquote overbought, but it's definitely getting up there, which is going to make it more challenging for a lot of these stocks and a lot of these ETFs and indexes to see that momentum back higher. So next resistance and target, we're already watching at 250, but there's one more to keep in mind. It's going to be sitting exactly where the price is at $245, kind of in line with the previous resistance that we talked about for Visa. So previous resistance also acting as a current resistance for Visa, and support level is going to stay but roughly at 228 for this company. Talking a little bit about Costco, and Costco here once again continues to be in a little bit of that range bound pattern and coming up to that resistance. You can see that we're down 68 basis points today. Why? Because it's coming up to that resistance, that red rectangle, once again an area that we have previously gotten rejected at for Costco several times. Support level is going to stay put at $531 per share for the company. And finally, we look at Enphase. Enphase here selling off over 2.4% under $77. So it continues to struggle at $79, close to $80 per share for Enphase. And that next support really is going to be $59, close to $60 for Enphase moving forward. These right here are going to be two areas of gaps that Enphase has left ever since the earnings, and of course eventually may or may not get filled, something that we have to wait and watch for Enphase. Now going over to volatility, so it is on a very significant decline, and what you will notice is that VIX, when it drops below 14, is when it comes down to that 25th percentile or lower, and that's exactly why I will be a lot more careful now moving forward for the markets, because the moment we get down to 12.7, it's going to get really, really interesting from a risk standpoint, because The markets continue to move higher on the back of volatility dropping, but a lot of individual stocks are now starting to become overbought with the VIX dropping. So when the VIX is low, it's time to go. And of course, not to mention the technicality of a lot of the markets here on an underlying basis is starting to become more and more overbought. So again, not to stoke any fear or any type of potential selling pressure in the future. But these are things that we analyze, right? We try to stay as objective as possible. I will call it out when conditions are great to be buying, and I will call it out when conditions are not so great to be buying. And that's exactly my point, right? It's all about a constant evaluation of risk and reward and assessment of what makes a good deal versus what doesn't. And right now, from a technical standpoint, yes, we're coming up to that lower high. We're still within the context of a downtrend. Volatility is dropping under 14. We're going to get down to the 25th percentile, which historically speaking, the volatility doesn't stay down there for a very long time, and it does spike back higher. And also, when you combine the winning streak that we have seen with the market, that's bound to end at some point. It's not going to go on forever. That is something that I can predict, right? That the streak's not going to go on forever. At some point, we are going to see a pullback. We're going to see a red day, which obviously is going to create more deals in the future, but something we need to also prepare for moving forward as well. So hope you guys enjoy this video and a complete update on the markets. Make sure that you drop a like, subscribe to the channel. Let me know your thoughts down in the comment section below. And again, 16% annual discount for our Patreon, for our Discord. If you want to join, be a part of our Money Invest community. As always, happy investing. I'll see you all in the next video.